The 2020 economic collapse has caused tremendous damage so far. We've watched one of the largest single-day point declines in the stock market history. The Dow Jones has dropped 37%. The S&P 500, that's dropped 33%. The Russell 2000, that's dropped over 40%. The Fed's panicking, dropping interest rates to zero, and trying to pump trillions of dollars into the economy. And people are left with one question in mind. How long will this economic collapse last for? That's what I'm going to attempt to answer in this video. Now, obviously, we don't know anything for sure. I'm not going to pretend to do. But the one thing that we can look at when it comes to economic crashes is history. How long did those crashes last for? And how do these compare to today's crash? So let's start with looking at arguably the worst ever economic collapse that we've seen in history, which was obviously the Great Depression. Now, the Great Depression was arguably caused by three things. First of all, prices of stocks going to unprecedented and ridiculous levels. Second, because of banking panics and monetary contraction. And third, because of the gold standard. And this caused, as I've said before, the worst market collapse that we have seen. The market crash lasted 26 months. Okay, note that down. It lasted 2 years and 2 months, and stocks went down 89%. But I want to move on to probably the most relevant thing that we can look at, and that is the Spanish flu, which occurred almost exactly 100 years ago in 1918. It's estimated that the Spanish flu infected 500 million people worldwide, or about 27% of the world's population, and killed between 30 million and 50 million people, about 1.7% of the world's population. And the interesting thing about the Spanish flu was that it didn't have a dramatic effect on the stock market. I mean, the stock market did go down, don't get me wrong, but it was only around 10 to 20%. And this is because during the time of the Spanish flu, World War I was going on, and the governments wanted the countries and the companies to keep producing so that they could fund the war. And the Spanish flu occurred in basically three major waves. The first in July 1918, second in October 1918, and the third in February 1919. And after that, it essentially disappeared. So realistically, it lasted 7 months, where it affected the world. Now, the interesting thing that I noticed was that when that third and final wave of the Spanish flu finished, we saw a dramatic increase in the stock market. Also, when the official ending of the Spanish flu was documented, again, stocks shot up. And this was actually the beginning of the 1920 massive bull market that we all know about. So there is precedent and data backing up that when the current sickness that we're going through does finish, we could once again see a dramatic uptake in the stock market. Perhaps it even going back to where things were before, just like in the previous Spanish flu epidemic. And that's what we're constantly hearing from Donald Trump. He thinks as soon as we've won the war against the epidemic, we could see an extreme increase in this economy once more. Now, I want to quickly go through a bunch more recessions that we've seen in the past, just so that you can get a feel for how long they tend to go for, how bad those crashes have been. It's very important to look through history. As Mark Twain so famously said, history doesn't repeat itself, but it often rhymes. It's the best way we can get a feel for how long this current 2020 crash will last for. Okay, let me take you back to when Germany invaded France. When this happened, US stocks fell big. It started on the 10th of May 1940 and finished on the 10th of June that same year. So it only lasted 1 month, but it affected things big. The Dow Jones declined 24.5%, and the largest single day decline was 6.8%. Okay, so let's move through these nice and quickly so that we can get a good idea of what history shows us. I don't know if you guys can remember the Kennedy slide in 1962. I don't know if you guys were around back then. I personally wasn't. Stocks had become overinflated during the years prior to 1962, and so things had to correct themselves. The Dow Jones declined 26.8% and lasted 6 months. The largest single-day decline was 3.1%. Black Monday is an interesting crash to look at as well, because it was so sharp, just like this current crash. Now, Black Monday fell 22.6% in just one day, and this was the period that the crash lasted for. The next major crash that I have to take you to is the dot-com bubble. Prices of stocks had become way too overinflated because of the introduction and growth of technology and computers. People overestimated how much these companies were worth, and stocks had to come down. They fell 45% and it lasted 25 months. And the last major crash that I need to take you through so that you can get a good grip of the economic collapses in the past is the 2008 housing bubble. Now, as a lot of you know, this came from the rise in subprime mortgages and inflated house prices. Things had to collapse once more, and they did. They fell 53.7% in a span of 16 months. Now, the largest single day collapse was 4.6%. Okay, so now let's compare all of these crashes to the current crash that we're going through. You all know what has caused this crash. It's caused by a sickness outbreak that has spread throughout the world. So far, it's lasted around a month, and the Dow Jones has declined 35%. The largest that it declined in one day was actually the second largest that we've seen. It went down 12.9% in just 24 hours. But when will the recovery take place? How long will the downturn go for? Well, the answer to that, it's pretty obvious. It essentially depends on two things. When the numbers of the people with the sickness start to reduce, and when people are released back into their jobs so that they can start working, businesses can start producing and making a profit, and the economy then will start steaming ahead. So if we look to the likes of China as a precedent to see how long things will last, we see something very interesting. The number of cases with the sickness in China jumped from less than 300 to 75,000 in 1 month. That's from January 20th to February 20th, 2020. But between March the 5th and March the 16th, only 200 new cases were reported. Emergency levels are now being downgraded, factories are starting to reopen, and the economy is beginning to chug along again. And this came from 1 to 2 months of extreme action and shutdown of all businesses. We could see something similar with the USA. I mean, Trump's already saying he's hoping to get people back working again within a couple of weeks, not months. So do I see the economy just rebounding to exactly as it was before? No, definitely not. This is going to take some time. I mean, even if people are allowed back to work, the sickness is still out there and still affecting people. So I think that the major indicator that we can look at, or the light that we can hope for, is when the sickness ends. And if we look back to the Spanish flu, well, that lasted 2 years, but the main part of it, where it affected the world, lasted about 7 months. So it could be around that time period before we see the worst of this economic collapse done with. Now, the next thing that we should ask ourselves is not just when will this economic collapse be over, but when will it fully recover? Now, to answer this question, I want to show you this graph that I was able to get my hands upon, which might give you a rough idea of how long things might take. So the key thing to look at is first, how big was the particular crash, and second, how many days did it take to recover? So the crash that we're currently experiencing is sitting at 35%. So according to this graph, it might take a bit longer than normal to recover. But if it keeps getting worse, obviously it will take longer to recover because the bigger the crash, the longer it takes. That's the correlation that we can see with this data. I mean, the median number of days it takes to recover is 645 days, which is just under 2 years. But, this is one of the more quicker crashes that we have seen, one of the more sharper ones, so I think it will take quicker than what history shows us for it to recover. I mean, ponder it. Never before have we really had a situation where the world economy basically shuts down for the short term. Businesses closed, people staying at home, all of that going on. But this is a short-term thing. Eventually, people are going to have to go back to work, and the economy will have to start rolling again. So I'm definitely leaning more towards the optimistic side of things when it comes to this crash and how long it will last and its recovery time. Either way, the important thing is that we do not panic as people, as investors, and as business owners. Now is the time to be prudent with our finances, starting to invest for the long term now that things are cheap, starting to be wise with our cash and debt when it comes to the way we run our businesses, because this collapse will end and we will build again.